The Reserve Bank has chosen to take a very slow path of lowering inflation. They've said they're trading this off against the gains in the employment market, but when you take that path, you risk people getting used to inflation at 3 point something rather than 2 point something, and that just means that when you do try and finally get it down below 3%, it could be that much harder because people have become used to the 3% rather than 2%.
When the Reserve Bank last hiked rates in November, Michelle Bullock said the central bank was taking out some insurance. In your view, do you believe that the Reserve Bank should be taking out more insurance now to guard against inflation becoming entrenched?
If you have a look at their own forecasts, you'll see that they're not actually forecasting to get back to the middle of the target band, which is one of their mandates, until 2027, I think, at this stage. And so that means it's a very slow grind reducing inflation, and that's just risky.
And so, in your view, the Reserve Bank should be hiking rates?
I probably would if it was my call, but it's obviously not my call, and I'm just one voice.
The Treasurer says successive interest rate rises are smashing the economy. Given monetary policy operates with a lag, how do you view the risk that the Reserve Bank could cause severe damage if it was to hike again?
I think that summary of what's going on misses a few key factors, and one of them is inflation is smashing the economy. And so when the Reserve Bank is raising interest rates, what it's really doing is it's giving us lower inflation than we otherwise would have. And so it's not really a case of if we hadn't raised interest rates, or if the RBA hadn't raised interest rates, it would all be hunky-dory and we'd all be dining out on smashed avos. No, I think it's a case of this is a trade-off. And it's trying to get inflation down, which is smashing everyone as it is. And you've got to balance those two.
The economy is recording growth just above zero. Business profits are down. Growth in private sector wages are at a 2-year low. We know consumers are under pressure. How long do rate rises take to work their way through the economy? And are we feeling the full effects of the last rate rise from November?
So actually it happens across a wide range of times. So some changes have an immediate effect. Certainly people kind of see the interest rate change and they're going to change their behaviour immediately. Other ones take longer to work through the system. So that's really a case of, you say that on average, maybe 12 to 18 months, but really that's just kind of the average peak, and there's already an effect from the first day you move interest rates, and there's some effects that happen longer than that. So I think to say that it's always a long lag, yes, it's a variable lag, and we've seen a lot of the effects of the interest rate rises already affecting the economy.
Are the Treasurer's comments this week helpful to debate about the strength or otherwise of the economy?
Politicians will be politicians, but I think that if you want to have a reasoned debate, there's no black and white. And really, the economy is shades of grey, economics is shades of grey, and I think that having that debate is nuanced, and that's more important. Yeah.
Is the Treasurer intentionally or not seeding doubt in Australians' minds about whether the RBA is doing a good job?
You'd have to ask them.
Do you believe these comments could impact how the Reserve Bank Board debates cash rate settings?
I would imagine that they would discuss it, but I would think that they would be focused on doing their job, which is getting inflation down and getting us to a much more sustainable state of the economy, which is better for all Australians. So perhaps over the tea break.
You have expressed that the RBA should have considered raising rates beyond their current setting of 4.35% in a way that it hasn't done so far. Do you doubt the sum of the current board members' expertise?
It's not a matter for me, but the Reserve Bank review said that there needed to be more expertise in aggregate on the board than there currently was. And so I think one of the ways that you can be more confident about the decisions they're taking is if you can actually look at that and say, yes, they have the expertise necessary to do what is ultimately quite a complicated and technical job.
The current Governor, Michelle Bullock, has ruled out a rate cut this year. Would the bank's credibility be called into question if it is forced to cut, as the market is betting it will, and against what Michelle Bullock has said, that there will be no rate cuts this year?
I think one of the things that a central bank can do is set out a strategy. And a strategy is not a blind commitment to a given path of interest rates. It's saying that, if A happens, we'll do this. If something else happens, we'll take a different path. And so if the Reserve Bank cuts this year, and it's because there have been developments that weren't anticipated today, I don't think that would undermine credibility. It's only if they're doing something that surprises markets and they've made promises that are too hard to keep. But really, it's a question of how do you message, how do you explain it, and you need to explain it ahead of time that if unemployment rises too much, for example, they may well cut interest rates.
And so is the RBA doing a good job in this regard, or could it be doing a better one?
I think it could be doing a better job in terms of the way it communicates what its strategy is. It's been loath at the moment to say make any commitments because it's worried that that might be taken as a promise. But I think if you want to have that reasoned debate, you need to actually spell out options.
John Simon, thank you.
Thank you.